Good day, everyone. This is Dr. Sivaraman of iknowindices.com. Welcome to the new week. Good day, Sandra, for confirming it. Let me display the PowerPoint presentation. Asian session live market analysis on July 5th between 5 and 5:30 GMT. So we will try to track the market after what has happened from that of this euphoric Friday. Now, I'll give the link for the live market code page. You can just open it in a browser and I'll focus the camera over that of the live market code page. Now currently Euro is trading around 1.2541, 1.2543. The low is 1.2522, the high is 1.2563. You know that Friday it went up above that of 1.26 and subsequently it has subsided from that of the euphoric condition. Currently it is showing 17 pips negative net change, that is from that of Friday close it has dropped about 17 pips currently, but it came down to the low of 1.2522. Then in the case of GBP, 1.5178 is the current level and the low is 1.5166, the high is 1.5202, negative net change of 21 pips is seen. In the case of USD/yen, 16 pips positive net change is seen. So when you see these three currencies, you understand that they are all making USD gaining move to start with. Then USD/CHF is making about 9 pips positive net change. 1.0640 is the current level. 1.0636 is the low. It is also trading near that of the low. And Euro is trading near that of the middle level. And GBP is trading near that of the low. And also in the case of USD/yen, it is trading in the middle of the, between the high and the low, middle level. Then with regard to the commodity pairs, USD CAD 1.0601, 1.0605 are the current levels, 1.0588 is the low, 1.0644 is the high, and you come across 21 pips or 22 pips negative net change. And in the case of Australian dollar, 0.8428, 0.8431 are the current levels. Then the low is 0.8377, the high is 0.8446, and it is showing 13 pips positive net change. So all the currencies are currently showing USD gaining moves. That means they are all weakening against USD. Then coming to that of the crosses, you find Euro GBP is showing 1 pip negative net change and USD CHF is showing 3 pips negative net change. And you know that after reaching the euphoric condition of 1.03 level in the case of Euro CHF, they came quickly to 1.33 area in the case of Euro CHF, and they are expected to gain further levels there. So you find in every currency or the cross, they try to make an extended move to an lowest possible level and just stun the traders, inducing them to liquidate and give the call that it could become parity and things like that, and subsequently reverse. So this is what they have been handling. Wherever they come across more of the unfavorable position which are not being closed by the traders, they are making massive stop and trying to earn from the other traders. Otherwise, you find invariably it is a thin volume market. That is why you find subdued moves are happening most of the time during the day. In the case of yen crosses, you find that their nominal positive net change is seen about 6 pips. In the case of Euro yen, 110.24, 110.27 are the current levels, 109.95 is the low. You know that they have taken it all the way to the top 107, and from there they are gaining the levels. And in the case of GBP yen, they took it to 131 area and again come back to 133.37, 133.44 area. 133.14 is the low, 133.54 is the high. Nominal positive net change of 12 pips is seen. So you find invariably the subdued move, the spread between the high and the low are less than 50 pips in most of the currency pairs. So which indicate that they are looking for volume to improve, then they want to make the quick moves in the market. So let me just focus the camera over that of the PowerPoint presentation and show you the slide. What could be the expected move for today? During the Japanese session, swing and firm up moves could be seen. So towards close of Japanese session, they may go closer to the high in Euro and GBP. And you are not seeing the contrarian move here. So they may not continue, they may not show contrarian move initially. They may show the USD weakening move today. And later on from that of the European session, they could slide the denominator currencies and show some contrarian move when Euro and GBP are making swing and slide moves. Then European session onwards, swing and slide move is expected. Then US session, even though it is a holiday in US, we could come across quick slide in Euro and GBP and also USD yen, and then slow firming up moves could be seen. So it will be a holiday thin market invariably today, and because already the market is lacking volume, and whenever the holiday comes, that too from that of Europe or US, you find the volume drastically gets reduced. So obviously the players will not be able to make effective moves in the market because the moves are made in order to earn money from that of the traders. And if the traders are absent, there is no point in making definite moves in the market. So that is what you could come across today. And tomorrow they are expected to make upward gap opening and rise Euro and GBP. So that could be from that time onwards you could come across some significant moves happening in the market. So before that, when they are dropping Euro and GBP, you can probably try to take some buy positions and still use the hedging order to limit the risk because you cannot afford to take unlimited risk. Then for the week beginning, what are the levels they established as the initial highs and the lows? The low is 1.2522, the high is 1.2563, and both the lows and the highs are intact. Similarly, in the case of GBP, both the lows and the highs are intact. You can see in the live market code page, the levels are being maintained and they are not being breached, the highs and the lows. And in the case of CH, also the low and the high are intact. And in the case of Japanese yen also, they are absolutely intact. And Australian dollar, there was a nominal dip and subsequently they gained the level and both the lows and the highs are also intact. Then Canadian dollar also, we come across, so there is a breach of the low. 1.0588 is the current low, 1.0595 was the initial low, and subsequently they made a small dip and again come above that of 1.0595, and currently CAD is trading around 1.0597, 1.0601. So you find that they made a brief downward soften and they could make some gains in the case of USD CAD and as the USD gaining move. And in all the currencies, I am expecting a firming up move towards that of the high or closer to high or a brief upward stop if needed. Then subsequently the slide during the day as a week beginning false move. So these are all the expected moves for today. Let me minimize the PowerPoint presentation and focus the camera over that of the live market code page and take up the questions which I've asked here. Season. He is asking about the gold. Gold this fall on Thursday, as you had mentioned, what is the outlook from these levels? Obviously, in gold, they have to make an upward move as a week beginning false move. So they could rise gold to 1217 or 1221 area and depends upon the stops or depend upon the traders pending positions on Thursday. A lot of traders have taken the buy positions around 1200 0507 area, and it's not short covering. Fresh long positions have been taken. It was very evidential, and then subsequently they gained the levels, and there are some traders who have taken the sell positions also. They will induce the traders who have taken the sell positions to do the short covering without giving good profit booking opportunity to that of the buy holders. But those who are holding the buy, and if small profit is seen, they may not book it because they have seen gold has got a tendency to rise about $30-40. So they will wait for the big chunk of the profit. Those who have taken the buy position around 1205 and things like that. So that is how, out of greed and out of panic, we lose money in the market, and they are expected to go below that of 1200 during that of the US session. Then on. What is the level to expect for Euro this week? Yeah, Euro once the downward stopping is done, and they restricted the downward stopping or the downward false move to that of 1.24 area only, and not go below that 1.24, or probably to 1.2350 maximum. Then there is a great potential for them to reach 1.28 or 1.2850 level during this week. And I'm expecting the aggressive gains in the case of Euro and GBP from next week onwards. So next week onwards, you could come across the full spread of the maximum permittable limit with regard to Euro and GBP could be seen. So as a result, you'll come across GBP is expected to gain about 500 to 600 pips, and in the case of Euro, about 350 pips. Sometimes it can be up to 400 pips. So that could be the possibility. And these are all nothing but the possibilities. So don't simply develop some rigid ideas, and don't try to take positions without stop or hedging order. And with RBA rate decision, we should be the most lead to hold the rate. Australia for now. Where do you see Australian dollar going against you? So whether the interest rate decision is going to have an impact in the market, you have to see. And probably if you are a long-term trader, probably those who have been in the market for a prolonged period of over 5 to 7 years might have seen that the interest rate decision need not be directly reflected in the market with regard to the pip range. Because earlier occasions when years were similarly increasing the interest rate in 2003, 2004, and when the rate was increased first time 25 basic points, Euro and GBP dropped. Second time rise of 25 basic points, Euro and GBP went up with a different interpretations. So don't think that if they try to increase the interest rate, the levels have to go up. And probably before the interest rate announcement in Australian dollar, it was trading around 0.87, and now you find it is around 84. So don't try to correlate directly, because you know that it has been proved beyond doubt. And if you see in other blogs, you can find that how exactly the correlations have become disconnect, and they have just proved it with the statistical evidence. I have been telling it, don't follow the correlations, and later on repent that the correlation has become disconnect. What is the big idea of following it, and afterwards once you have lost the money and say that okay, there is a disconnect with regard to the correlation. So they are all nothing but the coincidences. When you look charts, it might look similar. It doesn't mean they are all correlated. And that is how the market is. I mean, the market is not moved in that fashion of correlation. And those who find some sort of excuse or some sort of relationship in the chart pattern, or some sort of trends or patterns formed in the chart, they think that they are all correlated. They are all nothing but the coincidences, and there is no guarantee that in the next 1 hour the market is going to follow that. And earlier people have been telling that the Dow can be related to Euro. Probably Dow rise could rise Euro and this sort of thing. And now suddenly everything is stopped. because you find that euro is going up and Dow has come down and this sort of moves. So don't depend on such ideas because they are all not scientific ideas basically. And if you find a correlation of 70%, 75%, 80%, 85%, what is the big deal in it? Unless and otherwise it is a 100% correlation. Is there any sense that it is correlated 65% so we can use it as a trick? We can use it as a tool to make trades in the related currencies? No, not at all. And so if you simply think that stock market has to open, the commodity market has to open, that this thing, then you are not fit to trade in the current market or the forex market. Whatever the currency you are trying to trade, you just focus on that particular currency, how exactly the moves are. Because only when you are not able to get the clues from the respective currency, you look for other alternative clues. And clues are clues, they have got their own limitations. And balance. Would you make a trade today in such a thin market on a holiday or wait until tomorrow after the holiday? So as far as my trading is concerned, whether it is a holiday or whether it is a busy day and things like that, I will just watch the market most of the time. Whenever a good opportunity comes, I will try to take the position. And when they are making a quick downward stop, I will try to buy. And when they are making a quick upward stop or a gain, I'll watch and see that they are not reached the level of the new high for more than 30 minutes to 2 hours. Then I'll try to take a sell position. So that is how my trades are. So I don't really worry how much of profit I need to make, and that is actually not decided upon, because I'll try to enter into the market. If the going is good, I'll try to maximize the profit using the trailing stop. And if the going is not good, I don't mind accepting a small loss, or I don't mind booking a small profit. So that is how the trading decisions are made by me. And I use only the live market quote page for all my trading ideas. Then drop. What low can we see in GBP? So GBP currently is trading closer to the low. The net change is 25 pips. Negative net change is 25 pips in the case of GBP. And negative net change in the case of Euro is 20 pips. And the negative net change in the case of Euro GBP is about 0.000 level. So almost around the same level of Friday close. So you could come across in the case of GBP some more drop, because you find the net change in GBP is higher than that of the Euro. In order to create the market sentiment, they are expected to drop GBP. And already Friday I have seen a lot of comments in FX Street and other websites that GBP does not have a strength, or it is reluctant to go up as if it has got a life and it doesn't want to breach the line and things like that. And so that sort of comments were seen. So they could just come down below that of 1.51 briefly and then go up. That's what I'm expecting. So the low could be 1.5085 or 1.5067 and things like that. And if you watch, they will stop the low or they will fix the low for the day, and that could be invariably a prime number. Then once the prime number is set, then you can understand, okay, that is the low for the day. Then how is Australian dollar expected to behave for this? Australian dollar is expected to gallop and gain back to that level of 0.87 again this week. And grow. Would it be a good idea to sell Euro PN session for the day? Yeah, when they are near the high, because now high is set and the high is not breached, but again the low is set and it's not been breached. When they come closer to the high, when the high is not breached for 30 minutes of your observation, you can take a sell position. And that too, it is better to take a sell position during the start of the session, so that before the end of the session, you should be able to book profit. Once the position makes profit, try to keep stop at entry and try to maximize the profit by converting it into a trailing stop. So you can take a sell position near that of the high in the case of Euro or GBP, and during the US session drop you can book profit. These are all trading ideas, and you have to use the risk management, and you have to see that you are able to keep stop at entry. And after taking the sell position, if the position makes loss continuously for 2 hours, exit out of the position. That means it is not going to give you profit. Instead, it is going to maximize the loss. GTPT. Do you see USDN going below 87 today? What is a good level to buy USDN? USDN, it is holding around 87 area, and they are just hovering around between 87 and 88, and they are expected to make a consolidation here. Probably today or tomorrow they should make a downward stop below that of 87, and then subsequently gain the levels, because when they are holding it here without making a rise, and if you simply jump into that, probably you can book about 10-20 pips profit, but they may not be able to see the trending move. You know that yen is known to make trending moves. So from 91, 92 area, it has come down to 87 area. So that sort of trending move yen is expected to make, and before making an upward trending move, they are expected to make a brief downward swap. These are all nothing but the adjustments. What they do is, and see, USDN cannot come to 87 unless and otherwise the players sell it at 87.00 area or 86.95 and things like that. So when they are sold at one occasion, then they will drop the market after about 2-3 days to the same level and try to buy around those same levels. All the quantum of sell what they have done, they will try to buy so that they don't incur any loss. They are not fools to sell at the lowest level and buy it at the highest level. They only trigger the market by making such moves, and they are mostly circular trades. They would have just sold it to their counterparts, and their counterparts will sell back again when they bring it down to the lower level, and once it is begin equated, then they will start gaining the levels. Both the counterparts and the main players will start buying the currencies and start accumulating, and they try to gain the levels continuously. And this is what you come across in the case of the denominator currencies. Mostly they make one-sided moves. But in the case of Euro and GBP, you will be able to do either way swing trades, but not in the case of the denominator currencies. It is very risky to do either way swing trade. That is why I am recommending you to do a buy and sell trade in the case of the denominator currencies, that when they quickly make a drop, try to buy. Otherwise, don't do sell and buy trades in them. But in the case of Euro and GBP, you can do both buy and sell as well as sell and buy trades. Because obviously, market cannot, Euro and GBP, they cannot rise one-sided for the simple reason that traders have different views. So obviously, some will try to do a buy and sell trade, some will try to do a sell and buy trade. So obviously, they will try to hit the stops of both. So during such stop-ins, you try to enter into the market. So don't become the first victim. Instead, when they are trying to attack the victims, you try to enter into the market. Then they will not have time to attack you also. Then Francisco, do you think Euro CHF is still a good sell opportunity? Euro CHF is a good sell opportunity, 1.33, and probably you can develop an idea of that nature, but you have to keep stop at entry once you have taken the position, because they induce the traders to do such trades, and if you become a victim or you are being induced to do such trades, so I have no question there. I recommend only a buy and sell trade in the case of Euro CHF, because from extreme levels, just like that, they take it in one go. Afterwards, they don't relook into that area. Then we will be vulnerably caught in such extreme levels. So, for example, in the case of gold, 1,260, such extreme level they have shown. And, on that particular day, the spread was 1,256 to 1,263. and somebody says thinks that okay, I can take a 1,256 buy and try to book profit when it goes to 1,260 about aiming for $4, and if the trade fail to close the position, then you know what an amount of loss you will incur. So that sort of extreme levels, try to avoid doing a buy and sell trade on the highest level or trying to do a sell and buy trade on the lowest level. But you might be tempted to do that. Many traders say that uh, in the blog you might have seen that a lot of traders commented that when euro has gone to 1.23, 1.22, they said it will go to 1.17. You are the only fool telling that it will go up. So now you can understand how players have trapped them. Then what is a better entry point? Buy GBP. GBP below uh, 1.5070, if you buy, you should be able to sustain or keep stop at entry and book profit in that during this week. You can do position trade and you have to keep stop at entry and only think of position trade. If you are trailing stop, try to trail initially about 30 pips trailing stop. Then if the going is good, make it as a 45 pips trailing stop. Then make it a 60 pips trailing stop. Then make it a 75 pips trailing stop when the going is really good, so that you are not being affected during the wild swings they do during the game. Because the players know very well, a lot of people are using the trailing stop, and also uh, the traders do either way trading. That is, whenever there is a drop, they try to buy and quickly book profit during the rise, and again sell there and try to book profit during the drop. That sort of scalping or a swing trade for about aiming about 10, 15 pips, 20 pips profit. And they know very well they can be easily tackled. They will try to give some profit. Then the traders will think that okay, the going is good. Let me commit about 10 lots position. Okay, you commit 10 lot position. The players will just take away 50% of the margin. That's all. Then it will look like Las Vegas casino. Then grow. If the traders are not trading today, why would the players rise euro and GBP with a gap opening tomorrow when the traders will benefit? No. See, it is a US holiday. So that means officially the US institutions may not enter into the market because they might be closed. But the bank treasuries will be working, okay, where they can execute the trading orders. Similarly, you come across other countries where the treasuries are working for the intraday trades and the feeds are being sent from that interbank treasury. So all will be working. Only thing is it is a bank holiday, the public holiday. So many of the people may not be entering to the trade. They might be on a holiday mood. But still you will come across the other countries people will try to enter into the market. So initially weak beginning false move they make it and induce the traders to commit wrongly. Then the next day they have to trap them. And when they open tomorrow with upward gap opening, then traders will think that okay, this is a good level to sell or a good level to buy. So there could be either way trading potencies could be identified by the traders using the chart or various other technical analysis. And after the traders commitment, they will try to make the stop loss for them. So don't think that they will open high and then continuously rise without making any drop. So depending upon the traders' commitment, they will try to make the stop and moves. It is part of the game. So don't immediately imagine open high means they will open about 1,000 pips higher than the market and things like that. It's about 50, 40 pips or something like that. They can open higher from that of the previous day close. So now today they opened it lower. So that is how they do it. So that is what I am trying to mean it, and not that they will open straight away to at 1.27 in the case of GBP or 1.55 or 54 in the case of GBP and Euro, etc. So don't immediately derive your own levels. then you will get confused with regard to my talk. Then, yeah, what can be the low for Australian dollar? Australian dollar, they already set the low according to me, and they are expected to gain the level. And so, what do you mean by prime number when you mention about euro drop? A number which cannot be divided by any other number other than itself is referred as a prime number. I think you have to brush up your mathematics. Then you will be able to identify what a prime number is. Probably you can search in the web and Google search and find the answers to that rather than asking it. Don't expect any answer to come simply for you without doing a little bit of search by yourself. And only if you search, you will be able to understand and remember it. Otherwise, you will just hear it today and tomorrow you will forget it. And drop. For last 2-3 weeks, they have been doing an extended downward stop before they rise to the new high level in GBP. Same is expected this week. Last 2 weeks are different, sir. They are all the month end and the new month beginning, etc. Now you come across the new month. All the days in this week are new month week days. So obviously from second week of the month they are expected to make the trending move. So only one day they will make a false move. Either today or tomorrow they will make a false move and then try to do that. If the commitment from that of the traders is very less, then probably they may not make a week beginning false move today. Instead, they will make the week beginning false move tomorrow. In case if they are expected to make the week beginning false move tomorrow, then it could be during that of the European session tomorrow. If it is today, it will be week beginning false move during US session, and that means that drop. And if they are trying to do it tomorrow during the European session, then it could be tomorrow by European session. You know, in this particular week, you have come across the interest rate decisions are coming up from that of ECB and BOE on Thursday. So before that, they are expected to gain the levels. And you would have seen how exactly they gain the levels in the case of Euro and GBP before the non-farm payrolls. Very similar moves could be seen. So now they are using the strategy, gain the levels before the data and continue gaining the levels after the data. That is the strategy they are trying to do it. So understand that and try to trade accordingly. So from time to time they change the strategy. They had done earlier before the data a false move, a drop or a rise. Then subsequently after the data a little bit of volatile moves and do opposite of what they had done before the data. Suppose before the data they had dropped euro, for example. Then after the data release they make a little bit of volatile moves, then continue to rise euro after the data, after about 30 minutes or 45 minutes. So a false move before data and the intentional move after the data. But then subsequently now they started doing after the data a false move. For the simple reason, the traders were keeping away and they are not making any commitments in the market. So obviously there's no point in making a false move before the data. So after the data announcement, they make a false move. Suppose they rise quickly euro, then after about 30 minutes they start dropping it. Or if they have dropped euro after the data, because the data is positive or negative, whatever it is, and then subsequently they reverse and rise. So that sort of moves they have done it. But now the strategy they are doing is, before the data, if they are rising it, they continue to rise after the data. Before the data, if they have dropped it, they continue to drop after the data. So keep that in mind and they change the strategy in order to massively gain the levels and grab as much profit as possible on thin volume market. So you have to follow that particular tactic and try to take position. Can you give some resistance and support levels? According to me, that nothing is resistance and support as far as the market is concerned. It all depends upon where the traders find resistance. Say for example in the case of Euro, 1.2522 is considered as a strong support, and if all the traders keep stop below that 1.2522 around 1.2510, the market can go up to 1.2510 or 1.2505 and go up. So do you call it a support? Then if the traders find okay 1.2522 is a very weak support, probably below that of 1.25 could be the strong support. So if they keep a stop at 1.2490 and just watch, the players can take it up to 1.2488 and go up. So which one you call it as a support? You tell me. So whatever the lows and the highs they set in the market, you just follow from there. How exactly they are trying to take the market. And if they are keeping in the middle, understand that they are not finding volume. They come closer to the low, see whether they are going to make a brief stop or a quick downward stop. You can easily judge it when they keep a sell order exactly at 1.2522 for about 10 minutes. That means they are going to make a very big drop. Yeah, ask is 1.2522 for about 5 to 10 minutes. If they hold it, that means they wanted to drop it forcibly. So at that time, don't try to buy it near that low. And they will drop at least 30-40 pips, sometimes even 70 pips, and hit all the stops and then come up. So once a new low is formed, then try to. You have to watch the live market code page, understand how they are making the moves. It is like a football game. So you have to find out how exactly the opponent is trying to defend or opponent is trying to become aggressive. I have to read them. Only then I will be able to be successful in that particular game. And if I fail to read the opponent's strengthness, then it is extremely difficult for me to win the game. So gold, I am expecting them to stay below that of 1220 and then go below. So what is the effect of UK services on Euro today? So when UK services is not having an impact with regard to GBP, what impact you can come across with regard to Euro? Sometimes you come across when the GBP data, UK data is released, sometimes Euro will make very aggressive move. Sometimes when European data is released, GBP might be making aggressive move as if it is being affected. So they are all nothing but attribute any service or data, any data for that matter, even the strongest data what you consider as a non-farm payroll or the interest rate announcement, they are all just hypes. And they could be used only for about few hours, and afterwards the market has got its own ideas of making moves. You know very well about it. So don't give much importance to that of the interpretation. You give only importance to that of the time at which such type of data are being released, and they are trigger time in the market. That's all. Then Ronan, do you have a written paper that explains your strategy that is available for download so that I may study it? No, I don't have any public written paper, and I have only the lessons prepared for those who are taking the professional trader training, and so that is being sent to those who subscribe. So obviously I don't have any open paper. Otherwise, you come across in my website and also in FX Street under my name. If you just find out, I had given a lot of question answers sessions earlier in 2001, 2002, 2003 about the market, how exactly the market is manipulated, how exactly the limitations are fixed, and all the other advantages and the disadvantages and over trading. Everything I explained there. You can just go through them, and you have to do a little bit of hard work. Only then you will be able to find out, because it is a continuation. But whatever I said in 2000, 2001 as a lesson, still they have got the validity. And the market players have not changed their strategy. Okay, grow. After today, will it be a small move that is being a small rise for the week before the next week, big rise? So why do you assume that it's only just the start of the week and today is the first day of the week, and why do you conclude that this week there will be thin volume? Because obviously you come across a prime data release times are there on Thursday. So before that the players will try to induce the traders to commit wrong positions and try to trap them, and then you'll come across big moves happening in the market. Anurag, will N crosses drop or will they rise, especially commodity currency, AUD, New Zealand and CAD, etc.? So commodity pairs are also expected to catch up. They are also expected to gain, and USD-Yen is expected to make a quick drop and then rise. So obviously the respective crosses are also expected to gain level. If the big rise comes next week going to the net permissible level, will that be the highest then for the month? Yeah, obviously they will trade to the higher levels, and this week itself they will gain some levels, and the next week you will come across more and more gains. So they are not going to hover around the same level for some more time this week. They will just do a week beginning false move. Afterwards, the prime data release there is there on Thursday. So from Wednesday onwards, they are expected to gain the levels. Then what is the necessity to make a false move? Okay, it is not a very simple question. They have to necessarily make a false move in order to fool the traders. If I want to take away your money from your purse, how do I do it? I have to tell you as if I am your close friend and try to divert you and put my hand in your pocket and take away your money. Only when you are diverted, I'll be able to take away your money. If you are conscious about your money and you will keep your hand on the purse, and obviously I will not be able to take the money out of your purse or your pocket. So it is simply a question of diversion. So just to divert the traders, create the market sentiment, and then subsequently act against. Hope you are able to understand, Ronan. In Orlando, Doctor, Spain or Germany? I don't want to give any sort of comments with regard to football. Sorry here. What GMT time is the European session start? European session starts by 7:30 GMT. Okay, is that on the blog? Yes, in the blog if you search, you come across all the explanations are given. Besides, I also given the question answer session. If you just go to Dr. Sivaraman in search, the contributors search Dr. Sivaraman, then you come across there are a lot of question answer sessions I have given in 2001, 2002. Then also that is a question and answer session in the form of chats. So they are all written documents. Then subsequently you come across webinars, and those webinars were not recorded, but they are all available in my website, iknowindices.com. You can go through that of the webinars and other events, and there you will find the PowerPoint presentation explaining all the concepts. Then again, now frequently the webinars are being recorded from last year. So those webinars also you can listen to that. You'll be able to get as much ideas as possible. Besides, there are articles present in my website, in the home page and subsequent pages, and also in the blog content page. You come across articles, go through those things. And I don't think there is any necessity to write a very big book about trading. It is a question of just understanding the market. If you understand the market and you know what are the limitations of a trader, because we trade with a limited margin, we do the leverage trading. So obviously you have to understand when the market goes against us, how much of money will be taken out, and if the market moves in our favor, how much of money will be taken, given to that of the usable margin. So accordingly you have to take positions. And if you simply focus on the forecast or the strategies and things like that without money managing concepts, then still you may lose that account. So first of all, you have to understand that if I take one mini lot, the market goes against me 100 pips. How much of money will be taken out? Okay, can I afford to take more than one mini lot at a given time? You have to question yourself and do it in a demo trading platform, because invariably people who are entering into that of the demo trading platform, they only think that they have got that aggressiveness. They wanted to prove that they have got aggressiveness, then they can take even 100 lots and book profit and multiply that account just like that. But that is not possible in the real account, because in the real account, when the drawdown becomes more, obviously it will kill you and it will give the fear for you. And you know that it is a hard-earned money, you cannot afford to lose that money. Whereas in a demo account, it is a paper money, so you don't mind losing it, blowing up that account. So obviously the fear is not going to trigger you. Then you will find that going is successful. But when you trade with the real money, with $2,000, $3,000, $5,000, even one mini lot will give enormous amount of risk. You have to understand. So obviously, you try to open a trading account in where a platform has got a hedging facility. If you are a non-US client, then try to earn money from that. In case if you don't have the hedging facility, then decrease the quantum of position taken at a given time so that you won't get any margin call. And the next thing is develop the habit of accepting loss when it is minimal. After taking a position, and if the position does not make profit more than 2 hours, understand that the position is going to incur loss for you. Then cut it and review the market and try to enter into the market again. So these are all some of the ideas you have to understand, because when you are taking the position and if the position is not making profit for 2 hours, that means you are along with that of the herd of traders who are taking the buy position. That is why the market is not showing profit. The players are willing to sell at a lower level than your buy level. So when they are selling at a lower level, they wanted to drop. So you have to understand that and try to book profit or cut loss. And similarly, it doesn't mean that you have to do immediately a sell and buy trade. You have to wait for the market to stabilize with a new low after finishing the downward move, and then they finish the downward stop, and if you try to take a buy position there, at that time those who are stopped out will not take a buy, and only those who have got little bit of common sense think that okay, it is available cheap, beyond that they will not be able to drop, then and they are not cut that low for more than 30 minutes to 2 hours, then obviously they will try to enter into the market, and the players will not do further downward stop for them, because the players also start buying at that time. So after buying at those levels, they will not drop it severely. They will try to rise and book profit. Along with them, you try to book profit. So ultimately, small traders have to trade along with that of the players. Whenever they make a downward false move, try to take a buy. They drop the market and buy. They rise the market and sell. Whenever they are making an upward stop, you try to book profit with regard to the buy position. Be happy with that position. Don't become greed or panic. Don't give importance to your emotions. Do all N crosses trade in the range for many weeks? N cross is also expected to gain the level this week and next week. Okay, what are you doing? Yearly view webinar. Now, I will give the yearly webinar once the market stabilizes and the optimal volume is seen in the market. Then subsequently I will try to give the ranges for every month, but not before that. Because when the market is not making any headway, there's no point in talking about all the potencies, because we have to see the reality and act. That is more important. And I should not simply give the potencies, and if the market does not reach those levels, then you feel upset, or probably you will develop the tendency to ridicule me or just comment on me. I don't mind that, but I do not want to divert any of you. I want you to focus on the current market conditions and accordingly trade. Then CAPE. Is it 1.2610 is the cap for euro in this week? I don't think so. They are expected to go above that. USD CAD below initial low for some time now, move downside. USD CAD has come closer to the low, and probably they could make some more downward move. You are right. Then yes, when USD CAD gain moves, you mean that USD is getting strong? Yes, obviously USD CAD. That is why I always give the ratio with the symbols. No, I don't say simply CAD is going to gain. That may give a confusion. So I always say that USD CAD is expected to gain or USD CAD is expected to drop, so that you take it as a pair and try to understand it in a simple form. Because this is the normal confusion you come across in the denominator currencies. That is why many use the words that dollar and Swissy for Swiss franc and Loonie for Canadian dollar, etc. But instead, I just simply use that same ratios, euro, GBP, all the numerator currencies, they are all against USD, so they are all majors, so against USD. Whenever I come to cross euro, GBP, euro, CHF, I specify that. Then will euro come to 24 area and then gain? No, euro may not come to, euro could come to 24 area, and below that we have to see how far it is from. Your long-term USD CAD is around 1.10. Yeah, long-term USD CAD is expected to compensate or gain above that of USD CHF. So 1.10 is a potency. We could see that. Okay, let me just switch over to that of the PowerPoint presentation and try to conclude that webinar. So expected market moves for today, swing and firm up moves. The small gains could be seen in euro and GBP towards close of Japanese session, and then swing and slide during that of the European session. Slide quickly during that of the US session, even though it is a holiday, and then slow firming up could be seen. And tomorrow they are expected to open higher and about 40-50 pips higher during that of the Japanese session, and then probably gain some levels and make little bit of volatile move during the early European session, and then slide tomorrow. And during tomorrow US session, they are expected to make an upward stop. So let me not go on a daily basis. So let me stop with this. So tomorrow we will review the market again and see how exactly we are taking up the market. So please do visit to the webinar and understand. If you continuously attend at least for about 10-15 webinars, you will be able to understand all concepts. I will not be able to give all the concepts in one go. You have to understand that. So I take this opportunity to thank FX Street and also those who have participated in listening to this webinar, and also those who are listening to the recorded webinar, and come to the live webinar so that you will be able to ask questions and I will be willing to answer to those questions. See you. Thank you.